For the first time in nearly a year, both Bitcoin and Ethereum are about to reach their 200-day moving averages, and today I want to explain exactly why this is a very significant level for cryptocurrency. Now, a lot of altcoins, especially layer 2 scaling solutions for Ethereum, are absolutely flying at the moment, and I want to take a moment to talk about a couple of these like Optimism and Maddox, and talk about a special pick here that's up over 200% in the last week. So if any of that does sound interesting, make sure you stick around for the entire length of this video, as there will be important information discussed the entire way through. With that being said, let's go ahead and dive in here and take a look at what in the world is happening in this crazy world of crypto, where I'll be honest, there was some pretty tough news getting released, but it doesn't even matter anymore because it seems like people are so over and so done with all of the FUD that we've had. So we have the SEC charging Genesis and Gemini, Sam Bankman-Fried's trying to release some sort of newsletter, Crypto.com is cutting people, and guess what? None of it matters because the entire crypto market is flying with beautiful colors at the moment. So let's talk about this situation. Look back at the last time that crypto, specifically Bitcoin, has tested this area. And so the last time that Bitcoin even got close to the 200-day moving average was back in March of 2022. Now, the last time that Bitcoin was over this was in December of 2021. So if we're looking at the last time that Bitcoin was over the 200-day moving average, it was over a year ago. It was about 13 months ago. And if we're looking at the last time we tested this, it was about 10 months ago on Bitcoin. Now, every time Bitcoin has gotten close to this level since 2021, it has very steeply rejected it. We can see a nice little rejection here from the break, hook, and go. And then we can see a couple more rejections since then. And so now what we're seeing on Bitcoin is that we are really closing in on this 200-day moving average. It's a very major level for most assets, Bitcoin especially. And if we're going and we're taking a look at Ethereum as well, Ethereum's in a very unique boat, and I want to explain why. So if we're looking at just the 200-day moving average, it looks very similar to what Bitcoin's looks like. Again, we tested this at the end of 2021 and beginning of 2022 right here, but we also tested it a few months later around the beginning of April, end of March. Now, ever since then, Ethereum's had a couple of rejections of this level, but if we're looking at it now, it could very well be on the premise of a breakout of this 200-day moving average. Now, the last times that we've seen this happen, it usually means that Ethereum is going to run. If you remember, after the previous cycle, when Ethereum, and I want to zoom in actually on this, when Ethereum went and broke out of the 200-day moving average previously, this was when, I guess we can say that it was twofold. It was during the 2018 bear market, it was during the 2020 bear market, and after both of those, Ethereum shot up several X from where it bottomed. We can say that this is the last time that Ethereum had this crossover, and we all know that after this happened, Ethereum went from around 100, 200 bucks all the way up to nearly $5,000. And so now we're back in the same pattern a couple of years later, saying, hey, Bitcoin and Ethereum look very similar to where they did a couple of years ago. Granted, there's still the bottom of our current market is about 10 times above the previous bottom of some of the past markets in 2018, 19, and 20. So Ethereum's putting itself in a really, really good position here. And yes, we are on the premise of this breakout, but the one thing that I want to highlight is that there is a squeeze happening with a couple different levels of support and resistance. So if we're looking exclusively here at Ethereum, the thing that I am, taking note of is that it has support right around $900. And then it has a little bit more support, I would say, at two other areas. Number one at around $1,000, and then a little bit more at around $1,100. Now, there is a squeeze happening where there is a falling level of resistance right here with a rising level of support. And what this does is this is essentially just creating a squeeze on Ethereum where it's squeezing inside of this zone and getting tighter and tighter and tighter until ultimately it will either break out or it will break down. Now, hopefully, we end up seeing a breakout to the upside here on Ethereum, but does that mean that the bear market and that everything's behind us? I would say in the short, the answer is no. These are great moves to make, but both Ethereum and Bitcoin are yet to really break out of some of these major resistance levels. It's going to have more resistance as it climbs up here, probably closer to like 1700, and then more significant levels at maybe like $18 and even $2,000. So are we out of the clear yet? Not exactly, but we certainly are making really, really good moves. In fact, other altcoins, if we're looking at AJAX, it is flying at the moment. I don't know if all of you have seen this, but the analyst team over at CryptNation has been talking about this. In fact, we were just talking about this morning. So if you're not a member of CryptNation, you know, me, a bunch of the other guys were on the analyst team over there, and we love talking about what's happening in crypto. But this is a coin that we've mentioned before, and we were just talking about it internally just honestly a couple of hours ago. So this thing has been performing beautifully. Something to keep on your radar. I don't think you should FOMO into this, but maybe if you had some sort of position, again, not financial advice, but you know, this could be a scenario where maybe you look at the idea of profit taking, but ultimately you have to determine what is the best for yourself and your own decisions. I can't do that for you. But just one of those cryptocurrency that has been flying lately. Now, if we're talking about what's happening with all of these layer 2 scaling solutions, specifically for Ethereum, the big ones that come to my mind are Matic and Polygon. And I promised that we would talk about this because we brought it up in Wednesday's video, but I just felt like it would be too much for a single video, so I wanted to break it out into 2 separate videos. So if we're looking at what's happened this year with Polygon, it bottomed around June 18th of 2022. Since then, it's up about 190% from that bottom that it had about 7 months ago. So when this happened, or I guess since this has happened, clearly it's been one of the better performing cryptocurrencies in the market. A lot of things that are Ethereum related have been doing fairly well. The pattern that I'm seeing here is that if we also go and look at something like Optimism, Optimism has been performing beautifully as well. And I want to show the Coinbase chart here because I have a little bit drawn up. But this is actually in a very, very similar boat. It bottomed around the middle of June, and since then it's up over 330%, making it, again, one of the best performing cryptocurrencies. Now, is it a coincidence that some of the best performing cryptos are layer 2 scaling solutions for Ethereum? And I would say no. We know that sharding is probably still about 2, maybe 3 years away, and there is a need for layer 2s. There's a need to make Ethereum essentially faster, cheaper, more cost effective. We need higher computational power, and for all those reasons, a lot of people, let me zoom this in, a lot of people are very, very bullish on layer 2s. Now, there's no promise that even when sharding is implemented for Ethereum, it's not like layer 2s are just going to go away, right? I think that would be kind of silly if we said, oh, we don't need these anymore because we have sharding on Ethereum. The odds are we're still going to very much need layer 2s, and they provide a lot of value, right? They have these side chains, these side ecosystems. Some of them are meant for specific tasks, and there's going to be a lot that's going to be built on top of them before sharding is even implemented over the next couple of years. And that's a big push. I mean, even major projects from other blockchains like Solana are leaving to go to side chains like Matic and Polygon. So there is a lot being built. I think layer 2s are something that you need to keep an eye on. And now, again, I'm not FOMOing in to Optimism or anything at these levels. But if you were a member of CryptNation, as I talked about earlier, Optimism was the coin of the week last week. We released something on Monday saying, hey, coin of the week's Optimism, keep your eye on it. And it's had a pretty solid week so far over here. So maybe if Optimism comes back down closer to its moving averages, maybe a little bit closer to support, I will definitely be taking closer looks at long positions. Now, what about what's happening over here with the SEC? Well, crypto firms Genesis and Gemini are being charged by the SEC with selling unregistered securities. In fact, I wish there was a way I could flash up Gensler's video. Gary Gensler came out and made this whole video about like seatbelts and compared it to Gemini and Genesis. It was a really, I would say it was a poorly made and kind of cringy video. I get the point that he's trying to make. Is Gemini and Genesis in the wrong? Probably. Just the way that he conducted this video is funny. If you haven't seen it, you need to go see it. It's right on his main Twitter page. It's this animation that he had a team make, but you know, I think it's worth the watch. It's for a nice little laugh. But essentially, the point that I'm trying to make here is that Gemini and Genesis are going to be getting charged by the SEC. And we've already covered what's happened between these two a couple times on the channel, so I don't want to beat a dead horse here, but essentially, people would go to Gemini, and they had this earn project where they'd say, hey, we'd give you like 8% yield, APY or APR, and all you have to do is lend us your money. And so what they would do is they would take your money that you lent, and then they would lend it to Genesis, who would make more or significantly more risky trades. Now they would maybe generate, let's just say 20% on that yield. They'd give you back your 8% and then they'd profit on everything in between. The only problem is that, you know, obviously there's no guarantee that they're always going to be making this 20% or more than 8% for you. And somewhere in the mix, Gemini kept lending out their money, and it looks like something happened with the money when it was in the hands of Genesis. And now there is all sorts of issues attached to this, where Gemini is now missing around $900 million worth of customers' funds. So it's a whole debacle. Basically, Gensler is saying that they were being reckless and breaking rules and laws, and they are going to have to get punished for it now. Now, this one came a little bit to my surprise, I'm not going to lie. But Sam Bankman-Fried is launching a newsletter to defend himself. In fact, he said, I didn't steal these funds. And he has a really funny, I don't know if it's funny, you know, I don't hope for anyone to have ill will, but this guy's kind of getting what he asked for here with what he's done and what we know. But he says, I didn't steal these funds. I certainly didn't stash billions of dollars away. Now, this seems contradictory to a lot of the information that we know, and I'm also surprised that his lawyers let him do this in the first place. I feel like this is like he could let something loose that his lawyers don't want to get out. I'm kind of surprised that they even let him publish this kind of thing, but he really wants to defend himself. Is he right at the end of the day? Is this going to help him? I don't think this is going to help him at all. I'm going to be honest. I think he's dug his own grave. The guy is severely messed up his career. I would be surprised. I would be extremely surprised if he doesn't get jail time. But moving on to our final topic of the day, Crypto.com is cutting 20% of their staffs as layoffs continue to hit the crypto industry. I think that this is a little bit misleading. I think that it's saying that like there is a continued hit in the crypto industry when it's not just the crypto industry. If you haven't seen some of the layoffs in traditional, like finance, tech, just anywhere in the traditional world, they have been brutal. They make what's happening in crypto, they absolutely just dwarf it in size. There is a ridiculous amount of layoffs happening in the traditional world of business, especially in the States. So I would say actually that cryptocurrency is getting hit on a much lower scale than the traditionals, especially traditionals in tech. So it's not like crypto's getting singled out here. It's the whole economy is in a really tough spot right now. There's layoffs happening around the board. It's not just crypto. In fact, I would say that crypto is one of the only spaces that is actually still hiring. Like, yeah, there are non-essential roles, maybe marketing positions and stuff like that are getting laid off. But when you're going to what's actually hiring, crypto is still hiring a lot of tech positions. In fact, there are thousands of them out there right now that are open job positions for crypto, especially in tech. So there's still a lot of opportunity. I think that this is the time where a lot of these projects are dialing back on their marketing. They're dialing back on this massive push that they had to make for the last couple of years. And now they're able to take a step back and really focus on the fundamentals of their projects and build something that is a fundamentally more strong foundation moving forward. But that's gonna round us up for this video, everyone. I hope all of you did enjoy, and if you did enjoy this, make sure you stick around, because every single week we're putting out content just like this one to keep all of you entertained and to keep everyone in the loop with the crypto market. So if you did enjoy this, hit that like button, hit that subscribe button, and until next week, I will see all of you in the next video.